Hi, this is Dora Delelis with ThoughtsOnTheMoney.com. This is my first vlog session, and I started this vlog to discuss money issues and to bring you practical, sensible money tips. If you're not familiar with my background, I'm a CPA and a certified financial planner. My main career has been in accounting and taxation, but I added the skills required to obtain the CFP license because that's where my personal interests lie. All bloggers tell their debt story, and I'd like to tell mine. My debt story starts about 20 years ago when I had just started a new position. I was a fairly new homeowner, and I had a $110,000 mortgage at the time with very little savings. So I was incredibly energized with my career. I was highly motivated for career success, and I had just finished my master's in taxation. But what I realized very quickly after starting this job was that the person that hired me was not the supportive, nice person that I thought he was. And something occurred that was really very insignificant that he overreacted to and became incredibly hostile and belligerent towards me. So it disturbed me so badly that that night when I came home, I realized I was going to be a corporate slave for the rest of my life unless I did something about my financial position. Like I said, I only had about $3,000 in the bank, and I had this mortgage, so I didn't feel incredibly confident about my personal financial status. I made a plan to pay off the mortgage and have money in the bank. And I did that by coming up with a 4-year solid plan of figuring out how much I was going to deposit into savings each pay period and how much I was going to put into my mortgage account to pay the principal down. After 8 months, I had actually accumulated $16,000 in savings. So you see how easily and quickly things turn around when you apply energy towards them. After the 4 years, I paid off the $110,000 mortgage and had $50,000 in the bank. So I'd like to relay another blogger story, which was one of the first bloggers that I read about on the internet. The name of the site is called Dividend Mantra, and he doesn't own it anymore. I believe he sold it. But at the time that he did write personally on it and he did own it, he told his debt story or his financial background and his plan to retire by age 40. I thought this was genius. He created a plan to develop a portfolio of dividend-paying stocks, and it was going to provide him with dividend income that would pay his household expenses, and he was going to retire by age 40. So he started his plan by moving from his hometown of Chicago and decided that moving to Florida would be easier if he had to deal with a commute. So he moved to Florida, moved into a very modest apartment on the bus line to his job. So he eliminated the need for a car and to pay car insurance. He also had very modest furnishings so that every time he got paid, he was able to pocket 50 to 75% of his paycheck and start purchasing these dividend stocks. And at the time that he was still running the site, every month he would report on how he purchased the stocks, how he made the decision for the dividend-paying stocks that he chose, and he would report on the entire portfolio and the monthly income that the dividend income was paying him. So I thought this was brilliant, not only because he had a plan, but the steps that he took towards it. And like I said, he's not working the blog site anymore, so the portfolio and the income is not reported. However, he was in his early 30s, and I have no doubt that he would be able to reach his goal before or by age 40. And of the other bloggers that you do see that are writing about financial independence, retire early, when they have a goal set and a date set in mind, most of them have reached it before that date. So I'd like to move on to financial satisfaction. I believe that everyone can be self-sustaining and achieve financial satisfaction. And that's the reason why I wrote my book, How Ellie Found Her Financial Freedom. And the premise of the story is that I wanted to embed the messages of basic personal finance into a fictional story. And the reason for that was to take away some of the boredom and the drudgery and the complicated terms. They're basically a turnoff for people when they read other financial planning information. So it's a fun read, and I highly recommend it for everyone. So, like I said, I want to move on to the elements of financial satisfaction because I believe everyone should know the basics of personal financial planning and how to achieve financial satisfaction. The first element is having little or no debt, and that means getting your spending under control and eliminating purchases that require credit cards and personal loans. The second condition is having a savings plan and an active spending plan. That means that you would be moving money into a savings account on a disciplined and constant level each month, or each time you get paid, and also having a spending plan where you're cognizant of the amount that you're spending, and you have a spending list of needs versus wants, because it's not how much you earn, it's how much you spend. And both of these elements have to do with living below your means. Moving on to the next condition would be being okay with making large ticket purchases. At some time in every person's life, they will need to purchase a car or a home or a refrigerator or a washer dryer and other large purchases. If the thought of that gives you a mild panic attack, there's some work that needs to be done there. But once you reach that level and you accumulate resources, you will be able to be okay with making large ticket purchases. The next condition is having a retirement plan, and that involves either putting money away into your own IRA account or taking advantage of other tax-deferred savings plans, such as a 401k for employees or other tax-deferred plans available to self-employed individuals. It could also be just having a savings account for future needs during retirement years. The next condition is having a lack of relationship discord. And what I mean by that is having little or no arguments with people in your life about money. That means not arguing with your spouse, not arguing with your parents, and not arguing with friends over money issues. Very important condition to keep in mind. When you can have that to a minimum or not at all, you're on the path to financial satisfaction. Finally, having a realistic financial future sort of sums up all of these elements in that you know and have a plan of how you're going to accumulate resources and wealth, and it's a realistic plan, and you're taking actions right now. So the next concept I want to discuss is something that I find incredibly powerful and interesting, and it's called money scripts. These elements that go into money scripts were termed and researched by someone that I consider to be the Dr. Phil of finances. He combined the profession of personal finance and psychology into his practice. His name is Dr. Brad Klontz, and he works out of his consulting firm in California. Everyone has a money script. These are the mental messages that basically dictate a person's actions. And these mental messages were developed over a person's lifetime from what they learned from their parents, what they learned from teachers, what they learned from society about money. And it is incredible how powerful they are because they basically steer a person's actions. It's not what a person does, it's the mentality behind it. And it's amazing. I knew of this. I've witnessed it firsthand with people that I've known in my life that continue to make poor money decisions. And it's all based on their money script. So in future vlog sessions, I will be discussing this on a deeper level, but I leave you with this question. What's your money script? And are you acknowledging it? And is it serving you well? So on my next vlog session, I'm going to discuss debt issues, and I'm also going to do something that I think is a bit interesting. This is the 10-year anniversary of the Great Recession and the events that led up to it. And that event was so impactful to me that I created bits and pieces of information and kept them sort of as a chronology of events. And I think we can learn from that. So I'm going to present some visuals and discuss the events that led up to the financial crisis. Like I said, I think we can learn from it. and possibly avoid financial damage in the future. So thanks for listening, and I'll see you next time.